What's going on, guys? Welcome back. Today, I want to go ahead and talk about my last week of trading. And really, to say it blunt, my last week of trading was terrible. It was my worst week of trading in 2024. Now, there is a lot of things that I learned last week and a lot of things that I thought were valuable to go ahead and make a video about today. There are things that I learned both about my strategy. What does my strategy require to actually work? When does my strategy not work as well as it should? But not only things in terms of technicals, in terms of my strategy, but also that mindset, that psychology of going on a red streak, right? Because I was down 5 days last week. 5 days in a row, I had red days. This is not something that I have encountered or gone through in quite a long time, right? So it brought back a lot of those memories of some of those tough times in trading. And this time around, I had that experience and I had that mindset knowing that, hey, you're having a tough time. Don't keep pushing it, right? What are the things that we've learned in the past when we start to go on these red streaks? And those are the things that I want to talk about today, because there are a few things and a few keys that we need to know when we start going on those red streaks to keep us from going and digging ourselves deeper and deeper and deeper, eventually ending to a place that I think you all know and somewhere we don't want to be, right? It's blowing up the account. It's really messing up the performance. We want to make sure we avoid that. And there's some key things that we have to do in terms of mindset and psychology in trading to make sure we avoid that digging ourselves deeper every single day. So I want to go over first the mindset, the psychology tricks that I did last week to keep myself in a comfortable position, regardless of the performance. But also at the end of today's video, I want to jump on the charts and go through a little bit why I think the break and retest did not work as well as it should have last week. So if you guys enjoy this one, press that like button, subscribe to the channel. Let's go ahead and jump right into it. So to kick this video off, let me go ahead and just rip off the Band-Aid. You guys can see up on the screen how much I lost last week. I lost just about $15,000 last week trading. Now, in terms of the big picture, in terms of what I know I can make and what I can do, right, my capabilities as a trader, this $15,000 loss is something I can make back. And I am very confident in that, and I am happy that this is where my red streak sort of ended, right? I'm happy that I kept it to this number, a number that I can make back in 1, 2, 3 trades. This was very key for me, and I am happy this week knowing that, right? I'm very happy that I kept it to that amount. And this is something that's very important in terms of risk management and that psychology. And this is the first thing that I want to talk about in today's video. We need to make sure that we keep our losses small. And I know this is a very cliche thing to say. You hear it all the time, keep your losses small, blah, 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 right? I know, right? I know this is said a lot, and I'm going to say it to you again, because really, in my experience here from last week into this week, this was key, right? This was very important. I know that I was red last week. I know it's this amount, right? This X amount of money, but I have to be comfortable with that amount. And if I'm comfortable with that red amount, I can stay motivated. I can stay ready to make that money back. Now, if I look back at last week and that number is monstrous, right? $50,000, $60,000, $70,000, or let's say for someone like you guys, maybe if you trade a little bit smaller, let's say your account's $10,000. If we lost $5,000 last week, we lost 50% of our account. We cannot let it get to that amount, right? We have to do everything in our power to not allow that type of loss come in. And I know it's easier said than done, but I wanted to say this because it's truly, truly important. We need to make sure that when we're on those red streaks, when we're on those losing days, we are not letting things get out of control. We need to be able to come back from 1 week of trading, right? Think about it in the grand scheme of things, in the larger picture. It's 1 week, right? It's 1 week in 52 weeks of the year. We have to be able to lose for a week. It's something that we have to account for, just like a business, right? If you guys own a brick and mortar business, if you own a restaurant, whatever you own, right? You have to account for some slow days. We have to account for some of those days where business is not as good as other days, but we know that and we plan for that in the beginning of the year. So it's the same thing in trading. We have to be able to plan and account for some of those rough days, those rough weeks that things just don't go as well as we originally planned. And this was last week for me. So if it's a number that is all in the margin of error, right? If we have that margin of error, let's say for me, it's like a $10,000 red week. It's something that's comfortable and it's something that we can come back to. This is very important not only in terms of profitability and being able to stay green, but it's very important in terms of our mindset and our emotions, right? Because I can come into this week not really being that stressed, not being that stressed about last week. Yeah, it sucked. Yeah, I didn't enjoy it, right? It didn't like losing. I don't like losing. No one likes losing. But I can come into Monday, today, and still be motivated to come back, still be motivated to look for those opportunities. Now, if I lost, 50% of my account last week, yeah, I'm probably not as motivated today to make back some of those gains because I know realistically it's going to take very, very long to come back from a 50% loss on my account. Now, I know what I just talked about is pretty cliche, but I hope you can sort of understand how important that risk management is in terms of your mindset, right? Because I know I can come back from it. The next thing that I want to talk about is being okay ending the day red. Now, you don't hear much about this because I don't know why you don't hear much about this, but this happens to me. This used to happen to me a lot, and I think it probably happens to some of you out there as well. When you're down early morning, right, when you have that first few red trades, you want to come back to green. You want to get that day back to green. That's the only thing that you want. You want to come back into the green from that early morning loss. This is a problem sometimes, right? Because what we do is we push and push and push in sometimes environments that are not correct to be pushing. We take trades in bad environments that don't align with our strategy, that are just sort of boredom trades, random trades, with the ultimate goal of just getting back to green on the day. A lot of people have a hard time walking away from their computer screens, walking away from their trading setup red on the day. And typically, not being able to walk away red on the day leads to a downward sloping P&L the entire day. This ends usually very poorly. Now, the one thing that I could say I did fantastic last week is I knew when it was time to hang it up. I knew when I was down and out, right? There was last week I would take a trade, take 2 trades, take 3 trades, couldn't find anything, and I knew at that point, get off the chair, get out of your house, do not keep trading. Yes, you are red. Of course, my desire is to come back to green, but I know how this typically ends. And I'm here to tell you through experience, right? Because some of you may have not been here, but I can tell you through experience that that game of continuing to trade, trying to get back to green, typically ends in a P&L curve that looks just like this, straight from the top left to the bottom right. I don't know if that's oriented right on your screen. Probably not. But that is typically what it looks like. And that is something that we need to be able to accept, even if we end the day red. If it's a comfortable red day, if we've kept our strategy intact, kept our risk management intact, this is a good day. And it's a day we can come back from. Now, the last thing that I want to touch on here before we jump into the charts and talk a little bit about why my strategy didn't perform so well is sticking to the strategy, sticking to the game plan, and taking your shots. You guys hear me in the Discord quite a bit. I say I'm a shooter, and shooters have to shoot. We cannot make past performance cause hesitation. This is something that I think is a killer for a trader. Hesitation, in my opinion, is one of the largest killers in a trader's career. You cannot hesitate if the strategy is there. You cannot hesitate to take a trade because of your losses. Now, of course, like I said in the last little snippet there, we do need to know when to hang it up. We need to know, okay, I've taken 4 trades today. They're all bad. I don't like the market action. I'm not seeing those opportunities arise. We do need to know that, right? So there's a fine line there. But if the strategy is there, if it's something that you typically would take, right? If it's something that you typically say, okay, I like this a lot. This is a good strategy. This is a good setup here. We can't hesitate. We have to shoot. A shooter has to shoot until a certain point. Now, I know I'm sort of contradicting myself on a few points there, but I would hope that you guys out there would understand where that fine line is, right? The fine line between, okay, I need to wrap it up on the day. I'm having a bad day. I don't see the action out there. I don't see any A-plus setups. And then if there is an A-plus setup, let's not hesitate, right? There's a line there that we have to sort of learn, and we learn through experience. So last week, my days pretty much went like this, right? And it's pretty much everything we just talked about. I came into the day I saw setups, and I didn't hesitate, right? Very key. I saw what I liked, I took what I liked, and I didn't hesitate on my trades. They didn't work. I kept in line with my strategy. I stayed in line with my risk management. I took my losses. And then, finally, I learned when it was time to end it. I learned when it was time to hang it up, right? So those were all three things we just talked about. Number one, take those shots, take those plays when they line up. Number two, stay in line with your strategy, focus on risk management. If you take a loss, so be it, move on. Number three, know when it's time to wrap it up, except if the day is red, right? Those are all three things we just talked about. That was pretty much how every single day went for me last week. The first thing I want to say here, guys, is I do not like usually scapegoating my performance because of the market, right? That is not something I typically like to do because, you hear that flying around, manipulation. I can't believe the market. I can't make any money. There was definitely opportunities to make money last week. I saw plenty of traders make some really good money last week in the market action that was there. But I want to explain to you why, for me and what I specifically look for, it just didn't quite give me those really strong moves. Now, the first thing I want to preface, and I'm not going to go too deep into my strategy here today, guys. That's not what this video is about. It's more about that mentality, that mindset, and avoiding those major losses. My strategy requires continuation. The big, bright word, the rainbow word for me and my trading success is continuation, right? That is what it's all about for me. Continuation moves. I look for those moments in time where the trend shifts, where something shifts, right? Where you either go from creeping up and having aggressive downside or coming down and having that aggressive upside. I look for those shifts and those continuations. That's probably the best way to say what I do in the market. And last week, you didn't get it. Right? You didn't get continuation. And if you look at your chart right here on the NASDAQ, we pretty much have stayed in a 1% range all last week on the market. So if you're in a 1% range on the NASDAQ all last week, that would show you that there was no continuation. There was short-term moves, volatility moves up and down, very quick, very aggressive, but very wicky and with low volume. But there was no clean continuation. There was no continuation of downside in terms of time, right? There wasn't a moment in time on the market where the market was trending lower for a half an hour or trending higher for a half an hour. It was up 5 minutes, down 5 minutes, right? You guys saw a lot of it. Now, if you didn't watch the market last week, it's going to be very hard for me to get across this. You had to have watched it live. You had to have seen that price action live. And I think a lot of you, if you trade, you know what I'm talking about, right? Some of you that maybe weren't watching the market, may be hard to get that point across to you. But if you were watching the market last week on the short-term time frames and you were reading the action, you saw how wicky and how that lack of volume caused no continuation. And I want to pull something up for you guys. This is the SPY, the S&P 500, and the thing I want to point out to you guys here is the volume, right? And this is something we can see, right? This volume on the right side, we can use statistics and cold hard facts here to sort of prove the point of that lack in continuation, lack of volume, and why the break and retest just didn't quite work as well as it typically would, right? So looking at this, what I'm about to show you makes me a little bit more comfortable knowing that, hey, it wasn't a high volume week. There wasn't much continuation. And you have to understand that sometimes this is what the market does. If the market's channeling sideways, if there's not a lot of volatility, low volume, you're not going to perform as well. And those are the weeks we need to think about those first three things we talked about in today's video. Protecting ourselves, making sure we know when it's ready to wrap it up, still taking those shots, but we can see it in the cold hard facts here that it was a low volume and hard to find continuation week. So let's look over to the right side here. If you look over the volume, let's look at last week. This is last week, right? These 5 days were last week, May 6th, 7th, 8th, 9th, and 10th. And look at these volume numbers: 52 million, 43 million, 42 million, 52 million, 47 million. Now let's just look a little bit lower, right? Look at the last weeks before this, right? Look at these weeks. Look at all this down here, down to April 12th. 72 million, 80 million, right? 60s, 50s here again, some lower volume, but still up in the 60s to 70 millions. 100 million there on April 19th, 70, 75, 90, 92, right? So some bigger volume numbers. these were better opportunities, in my opinion, and I didn't have this type of lack in performance during these periods. But if we look at this period here last week, look at that volume. And this is sort of that direct correlation that I found with my performance, right? I saw my performance lack in that low volume environment and in that sideways environment. So I learned this about myself last week. I'm not going to go much deeper than this. I know there's, we can go and dive deep forever into like every movement that went on last week. Unfortunately, I don't have the time for that, and I don't think you want to sit around for that either. But to sort of generalize the technicals and generalize the market last week and what I learned about the break and retest, what I trade, it requires continuation, it requires volume, it requires movement in the markets. Now, of course, there are ways to make money in the markets during low volatility and low volume, right? That is without a doubt. So I'm not saying that you can't make money in that environment, but for me personally, that is why I found difficulty. And I just wanted to give you a general idea of where my strategy works and where it probably doesn't work as well. So if you are watching my videos and you do want to trade similar to how I trade, I want to make sure you know that if you encounter a low volume week and a sideways week, it's probably not going to work as well. And those are some of the weeks that I'm going to probably have some red days. So guys, I'm going to go ahead and wrap up the video here. I hope you enjoyed today's video. I wanted to try my best to get across what I encountered last week, the problems that I had, the mindset that I had, the psychology behind my week, some of the technical reasons I had problems. I hope that this video gave you some insight. I hope that moving on, CPI Wednesday, PPI tomorrow, I'm hoping that some of this economic data will get that volume pumping in the market again. There will always be those great opportunities out there on the market, and it's key for us to know when it's time to take the foot off the gas, understand when some of that market action is not as great for how we trade, stay alive, and wait and save our ammunition for the times when the market is hot and the times that we can strike. This is a very important concept that as a trader you will have to learn if you plan to be here for the long term. Press that like button, subscribe to the channel, and I hope to see you in the next one. Peace.